Coming up, before we get into today's episode, we want to tell you about an event we're really excited to attend, and you might want to consider attending as well. InsurTech Connect London 2026, taking place on the 26th and 27th January at the brewery in London.
It's an invite-only senior level conference focused on the London and UK insurance market, where leaders from insurance, brokers, MGAs, insurtechs, and investors come together.
The format's pretty interactive for a conference. Expect roundtables, workshops, fireside chats, networking drinks, an innovation zone, and more. And I can only say from my personal experience, ITC strikes, for me at least, the perfect balance between high quality content and networking with people you always wanted to meet or you haven't seen in a while or you just enjoy hanging out with.
Just second that, I feel that ITC is the premier insurance conference. I've always been a big fan and attender for years to come. Combine that with London, which has its own insurance history, some might say, I think it's a real winner. So if you're shaping strategy, leading innovation, or building the future of insurance, this event is really made for you. The guys at ITC tell us spots are limited. They do have some early bird offers still going, depending on when you listen to this. So check it out.
Go to london.insurtechconnect.com. Don't forget the E in the middle of InsurTech to apply to attend. Check the agenda and see if you qualify.
We hope to see you there. Now let's go into the episode. Hi, everyone. Welcome back to another episode of Reinventing Finance. I'm very happy to introduce our guest in a second today and a really interesting topic that is at the heart, I think, of most people today if they follow the news. But as some of you who might have listened in on the last two episodes, I'm happy to not introduce, but to say hello to my new co-host, Ron, again. Ron, very happy to have you on board. How are you today?
Very well indeed. And especially today, it's all about cyber. So interesting topic awaits. Happy to be here.
Awesome. So, as usual, it's not Ron and I by ourselves. We have a guest, Carl Bryant, head of International Coalition. Carl, it's a pleasure to be here and dialing in from a holiday. Thank you so much for that commitment to educating everyone about cyber.
Thanks, Nick. Ron, it's a pleasure to be here with both of you guys. Happy to talk about cyber. It's what we do, and it's an exciting time here at Coalition. So I'm Kyle Bryant. I'm head of International Coalition. I run all of our offices outside of North America. We are on a march across the globe as we expand, and it's a really exciting time here.
So maybe before we kind of jump into the topics, what are some further things that might be relevant prior to your current role that would help our listeners, viewers to maybe put some sense into what you're going to share about cyber? What brought you to this point that's relevant for this conversation?
Yeah, I guess I'm one of the old guard when it comes to cyber insurance. My cyber insurance career started when I joined insurance, back in the mid 2000s. And I had the opportunity in the 2014-15 to move to Europe and expand a book of business as cyber insurance was growing rapidly across Europe. And it's led me to this point where, the market has changed so significantly. The solutions for cybersecurity, let alone cyber insurance, have evolved as the risk has evolved. And in 2021 or 2023, I left the company I was with prior and joined Coalition for a really promising opportunity to change the dynamic in which the way insurance is sold, as well as cybersecurity protection is offered. Bringing that under one single solution is something that I think I'm passionate about because it aligns the incentive. We're both, insurance means that we're going to pay the claim when it comes. So who better to prevent it, right? You've got money on the line. I think that's fundamentally one. The second thing is, during that last hard market cycle, as we would call it in cyber insurance, where premiums rose and terms and conditions narrowed, um, there was a reflective moment there. And what is insurance doing for the customer? How is the insurance, how is the customer at the center of that equation? Um, Historically, insurance has been built on, prior claims data in order to predict future outcomes, of course. Um, but cyber risk is wholly different. The rate at which the risk landscape changed, even over that time period with the rise of ransomware, meant that insurance couldn't keep up with those changes in the way we analyzed exposures. Um, and active insurance, as we call it at Coalition, is here to solve for that. Um, and it may sound like, we're going to talk a lot about complex things that we do here and the exciting things that we do here to solve for that. But the reality is that what we're trying to give to the customer at the end of the day is something very simple. It has some parallels in the market as well. I mean, if you think about, auto insurance or motor insurance, training your drivers, keeping them up to date on how to drive, giving them sensors and technology which show them, how aggressively they're driving or defensive driving can mean better outcomes, can be safer drivers, right? Um, the only thing different about cyber is that the risk is evolving at a more rapid rate.
So speaking of active insurance, a term you just mentioned, and you directly come across it. For example, when I browse your website, protect your business from cyber threats with active insurance. Here, it looks like that Coalition has taken a distinct approach to underwriting, to a more holistic, integrated approach using live data than just application forms. Can you just walk us through in terms, even I can understand how that model of active insurance works?
Yeah, let me give you I say the layman's view here would be we want first of all not to make the buying process more complex. However, if we were just selling policies, like a premium and paper go a long way. Like you can just lower the price and have some good marketing and you can sell a policy. Cybersecurity, everyone's aware of it. Um, but the solutions so far have been quite fragmented. And I do believe if you think about how the insurance industry focused on it previously with static questionnaires, and a lot of them have traded one static view for another, a third parties, which may scan the internet and it may be a more informed view, but it also may be quite generic, and it also may be static. Our approach is one is let's make sure that we have the most comprehensive data available to analyze about a risk. That's our starting point. So let's make sure that we're relevant from a starting point perspective. And then let's make sure that that's live and regularly, readjusted. And the way we do that is we are scanning the internet, all of the public facing internet and all 63,000 ports exposed to the internet in real time daily. Now that is a lot of information and it could lead to a lot of noise. But the magic about being an insurance company with over 100,000 customers worldwide is that we can take that data, analyze it against actual incidents. So we reduce the noise and reduce the fear-mongering and the alert fatigue that that potentially create for our customers to give them the most actionable insights, right? That becomes active insurance. Every time a customer joins Coalition, they are being protected by us. We are going to deliver alerts, notifications, guidance on software and end of life risks during the policy period so that customers can get on with the things that they want to do the most, which is grow their business. That's active insurance. We prevent claims, and it shows we have 73% lower claims frequency than the industry average in the US.
So you are constantly monitoring a wide range of data points. So I would like to understand a little bit more, a little bit deeper. How do the signals you basically get, how do they influence pricing? Which types of signals are the important ones? Which are the really predictive ones? Future claims versus, okay, this is just interesting to know.
Yeah, it's a hard question to answer because signals change regularly. I'll give you some insight, how things have evolved. A couple of examples. One is that perimeter security devices, which Things like firewalls or VPNs are often designed to help protect customers or actually improve cyber risk. But if they have a vulnerability that's unaddressed, those become risky panels if they're exposed to the internet. They become the highlights, right? And those wouldn't regularly be picked up, by an application form or a questionnaire. Those become easy signals for us to say, hey, you've got an exposed panel, you've got an exposed VPN. Let's address that, right? So we can scan for that, determine, what version they're running, if they've patched vulnerability, and address that. The second thing is simply, we can tell, which softwares perhaps create more vulnerabilities. We released our, risky tech index this year, which gives companies guidance through our control panel, our control product, how to make choices about software and technology, how much they should pay attention to the vulnerabilities. Again, this is all to reduce noise and make sure that what they are actually doing is focusing on the things that's going to reduce actual incidents. There are thousands of and millions, I would say, probably historical vulnerabilities that have been announced as critical, but just aren't as exploitable or aren't as often attacked by hackers or used as a vector of entry. So, we want to make sure active insurance just closes that feedback loop to make sure that our insureds are well aware of what they should be doing to protect their business.
And how, for me, as an enterprise interested in what you're doing, these signals you just talked about, how do they influence pricing? How do they influence coverage? How does that all feed into a final binding decision?
Yeah, look, I think if price is your motivator for buying insurance, we actually might not be the decision for you. We might not be the place for you to put your business. You're buying protection from us. We aren't just selling policies, we're selling a partnership. And I think that's an important differentiation. One of the challenges we have when working with first-time brokers, and we deliver white glove service for a reason. One is we want to bring brokers along on the journey to show true differentiation in the business. One of the challenges is that historical, broking works on comparing terms and conditions and premium, right? Those are the two main things. So what's your coverage? What's your premium, right? That in a simplistic view, is great if paper is the priority, right? If you're trying to sell a contract for risk transfer. We want to give small businesses, yes, a safe place to park that risk they want to transfer, but we also want to be offering protection. You're buying into that coalition, right? And we want to be protecting customers. So, to your question, we want to create a price which supports the protection of the customer. And we know that works. We have fewer claims, we have better loss ratios, and that expense that we create by servicing the customer actually produces better outcomes. And we believe we are by far the most efficient way for a risk transfer spend when you consider the whole view of what we're offering to them.
Just trying to play devil's advocate here. So if you say lower loss ratios, great. Scanning the entire internet probably adds some cost to it. If you take some analogies that were, smart home or any form of telematics, one of the problems was that the cost of monitoring and risk reduction actually were higher than the experienced loss reduction. Now, if you're saying that even though you have lower losses, you have active cyber, but you don't have more attractive quotes, isn't then the whole process just more expensive?
Well, I would.
On the portfolio view, right?
Yeah, to
I
return,
think.
but to return back that to you, I'd say is that I would combat the idea that being expensive is perhaps a bad thing. It's a value proposition, not a price proposition. And here's what I would say about pricing. We are competitive. Like we are competitive in price. Look, I think the market cycles
Mhm.
are bad for business. I think we can all agree with that. Predictability in pricing is what you want over the long term. And we are committed to creating a consistent pricing environment based on technical underwriting, technology-based signals which drive pricing, not market-based. It wasn't that long ago, just a few years ago, where the predominant way to price cyber risk was by industry and revenue. That's it. How relevant do you think that is to cyber exposure? It's just not that
S-
relevant.
Really? I would have thought that there is some relevancy, taking a bakery versus, I don't know, a SaaS company, or would there be other, what is more relevant than, patching, not having a VPN, having a VPN? What would you say?
Well, you've got two things, right? Of course, revenue or size of the organization is going to produce a higher severity, just as a proxy to complexity of the org, right? Well, yes, of course. It's not to say you ignore those as signals, but are they as relevant as your overall internet exposure? For example, if you have one baker or wholesale baker even that has no website versus another one that has 30,
Sure.
I mean, that begins to change the equation. You start throwing in one that has 10,000 endpoints versus 100, right? It begins to change the dynamic and way you look at risk. One of the parallels I often use is sort of low net revenue businesses, things like car dealerships or automotive dealerships, where there's a lot of pass-through income.
Hmm.
The cost of goods is high. Revenue is a terrible indication of that actual exposure to the business. The net revenue is a lot lower than the
Hmm.
top line. So how do you manage that exposure? Well, you need to look a little bit deeper, right? What's the average transaction size? What's the exposure to funds transfer fraud? Well, what's the avenue for them to, what are they doing to protect that? So the questions become highly technical quite quickly, but far more relevant for appropriate pricing over the long term.
And before kind of moving on to next set of questions, just why would you search the entire internet and not just the endpoints of your considerable 100,000 customers? But I mean, that seems like a lot of, I don't know, activity.
Boiling the ocean.
No, I mean better data and insights for our customers. I mean, like that's the bottom line. That we are, in addition to, scanning the internet, looking at patterns and software usage, as well as, if we start talking about systemic aggregation, is understanding third-party aggregation risk
Hmm.
across the internet is important. Um, but also, we are using this data in conjunction with our own data centers and honeypots. So we know that threat activity, how it may interact with portions of our business and be able to identify those before they actually impact our customers.
Understood. If we um And I guess one part of that is to position yourself as a knowledgeable partner and not just paper, is one example of that is your cyber claims report. What I found quite interesting is that you've said that kind of ransomware frequency stabilized,
Yeah.
severity remained high. That I was just thinking with AI and voice bots and
Yeah.
I would have thought that there deep fakes, that there would be way more attack vectors that wouldn't have been easily exploitable even 6 to 12 months ago. How do you square that? What am I missing here?
Yeah, well, let's start with AI. From a claims perspective, I'll be the first to tell you is that let's avoid the fear mongering. AI claims have not caused any significant uptick.
Why do you
Uh,
think that is?
yes, AI makes phishing perhaps easier. It makes, perhaps the methods a bit more um, uh, influenceable, I would say.
Sure.
But the reality is we just haven't seen a significant uptick. The reality is, here's the frustrating part, is that the same old tactics still work. Why would a hacker change and start using something different? Nobody, including hackers, like new things. Like they don't need to if they're making money the old way. And business email compromise and funds transfer fraud still make up, 60% plus of all of our claims. And to your point, yeah, ransomware frequency is relatively stable. but the severity is high. Ransomware is the bad, bad, bad day. That's the really bad one. Business email compromise and funds transfer fraud, though, drive the majority of the frequency, the vast majority of the frequency. If you look outside the US, our frequency and severity is lower. Um, but that's largely driven by a claims experience where business email compromise and funds transfer fraud are actually higher, but ransomware is lower. So the US is simply a more challenging environment.
I have only one question in between. When you just mentioned the AI, it could influence things, but at the moment, it's not that big of a problem. Is that because, in layman terms, hackers just not good enough yet at AI? Do you think this is going to change? Or is that indeed fear mongering and it won't change the game?
Well, the only thing I can be 100% certain of is things will change. They always change. AI is here and it's very, very promising. As a company, we fully leaned into AI, not only as a way to create more efficiency. For example, things like, automated ticketing, of sort of help desk and service tools where, say 70% of the notifications or requests we get from brokers may be similar. So how can we automate that through AI to make it work more efficiently, both for us and brokers? You can use that as an attacker to say as well as like, how can I automate, email attacks and, and create scalability? I mean, those aren't really hard things to wrap your mind around. AI's here and it will create new threats. We're constantly monitoring it and then validating that by humans in our threat research team to make sure that, what we're giving back to customers again is not just noise, not just fear. We're giving security and safety, which customers come to insurance for. We're mindful that AI is a big topic, and we just want to be very careful that we're given that comfort back. We came out last year with an endorsement to our policies that says we are affirmatively covering it, even though we believe it was covered before. We want to give that comfort to clients to say, hey, look, whether the attack vector is AI or not, you
Sure.
have coverage with us.
And I think then we can, no, we can, unfortunately, we must go to the next section. But when you mentioned ransomware, I was just always curious, kind of coming back, never negotiate with terrorists. So do you pay it or do you don't? And I always like, if you pay someone who already, how does it work, right? Do I pay them and then it's closed, or do I then trust of the fairness of the thief? How does that even work? Just from a kind of, I don't know, spy thriller kind of background. So how do you deal with that? I just don't know.
Yeah, well, look, I've never negotiated with terrorists either, so
I think
I
that,
can't give
okay,
you.
I think none of us. Okay, good.
Yeah,
I,
there's no.
I would really love to have an episode on never split the difference versus the Harvard
Yeah,
concept. Do you meet in the middle or
Yeah,
yeah,
look. It's a very individualized process when it becomes negotiating. There are certain threat actors which we know are easier to negotiate with, and our negotiators understand how to work with those. But at the end of the day, the decision to pay or not has to sit with the insured and has a lot of variables, right? Do
okay.
you have backups? Can you, rekey or manually recover your business? What is the cost to you? Is there a moral factor that exists in your business? What are the regulations you have to follow? Of course, there's compliance hurdles to get through as well. So it's very individualized, and it's hard to give a direct answer on that simply because, the circumstances are just different in each situation.
Fair enough. Thank you, though. Let's maybe go
talking?
to the next section about,
Yeah, talking about regulations. I mean, you with Coalition, you're scaling now all across Europe, right? You have operations in Germany, in the UK, in Scandinavia, Denmark, Sweden. So for me, it would be very interesting. You just mentioned regulations. What's proven the hardest to adapt when you enter all these different markets? Is it regulations? Is it the broker relationships, or are the client super different? Who throws the biggest stones at you when you enter a new market?
Yeah, I can go a lot of ways with that. First, let me say this: regulations are not the biggest hurdle. They're a known entity, right? Insurance is a highly regulated business, and rightly so. Um, the most important thing when you're building an expansion model is to build in agility. If you build in the proper agility to a model and have the proper, patience and feedback loops and frameworks built into it, a lot of times those things that are hard look more like decision trees or forks in the road rather than pitfalls. It's something you can move as you go. Um, we are committed to every market we enter for the long term. We built our entire business around long-term vision. We have long-term capacity agreements with our great partner in Allianz. We are not chasing growth at all costs. We establish our business, we expand our footprint, we expand our resourcing with the level of diligence required to make sure at the end of the day we're providing a solution to the insureds that is going to be consistent and up to the standard that Coalition desires. If you think about, what are the more challenging things, I'll tell you. What takes up most of my time is hiring. Things that we know about, like long notice periods in the insurance industry, talent scarcity when it comes to cybersecurity and cyber insurance, is always top of mind. So having the appropriate timeline to recruit and hire often is the biggest challenge in front of us. To the model, the model cuts across boundaries in the same way that digital landscape does. So, even if we take into account custom and tradition that may exist even in cybersecurity or in the insurance market, things like tacit renewals or otherwise, they're simply neutralized by a conversation around cybersecurity, which just resonates through cultures. It doesn't matter. Cyber risk in Germany is very similar to cyber risk elsewhere. Now, the claims experience might be different. The regulators might be different. Um, but the cause for concern and the goals of the client are the same. We want to protect our business and prevent incidents. So it's a pretty simple conversation to have with most brokers to get them onboarded to the idea and the solution we're bringing. But of course, as we enter markets, trust hurdles are something you have to jump, and they do take time.
If you
Just
need to
kind
have
go
only
ahead.
one short follow-up, because I liked what you just said about the brokers. The claims are different. The product itself might be more similar. Isn't Are there one to two very feasible, concrete, specific takeaways which you can give? What does work well and what just doesn't?
Well, I'll tell you this. At this point, I have no regrets, right? We've been expanding internationally since I've joined in 2 years and have had massive success in every country that we've gone into. Um, Obviously the market conditions change and entering markets have different level of success based on the market competitiveness and the timing in which you enter. Um, but there are no regrets at this point. Again, I'll go back to if you build a great model or a great muscle to exercise when you enter a new country, you avoid those things that might seem like they're not working, but they're just nuances or changes you make during the process of launch. So by the time you go live, or even in the first year, those little changes you make are things that you can expect, plan for, and make quite quickly.
So can you be and fully understood if you don't want to go one level below? It's basically how do you select the market? How do you start a market, right? Do you hire first? Is that junior hires, senior hires? Do you go with leading brokers? Do you potentially buy distribution? Are you very opportunistic? Do you have a strat? It's just it must be a few of those things in unison. And as you said, some probably have a level of agility that you don't go rigidly. Some things are just opportunistic, or maybe they're not. Just kind of one level below to say this is what worked for us. If you are happy to share that.
Yeah, of course. Look, I think you start obviously with the addressable TAM. So, what does the existing marketplace look like? How much premium is there? So you know what already the business you're fighting for that's already in the market. The second thing you want to look at some economic factors, right? Like, so why is penetration of cyber insurance particularly trailing? So what's the upshot opportunity? And one of the reasons we do that is we're committed to growing the market. We're not committing to boiling the ocean or just competing on business that the insurance industry has already captured. Growing the market is something that we believe has to happen long term. And if we do talk about Coalition Re in a little while, I can talk about how we sort of tackled that from a reinsurance perspective as well, because capacity in is good for us if we want the cyber insurance industry to reach its full potential. Um, and so first we look at addressable market, what's there. Second is where we think the market will grow, where it'll go to us. We look at the distribution network. So is there a healthy and stable distribution system between wholesale and retail brokers? What does the agency model look like? What's the penetration of that agency market? Is insurance offered standalone or package? So do we have the relevant policy structure to impact the business there? We look at talent. What talent is available? You asked the question about do you hire a senior person or a junior person? It really depends on what's available to us. One of the things we talked about is notice periods, right? A very senior person may have 6 or 12 months notice period. Are you prepared to sacrifice a year of planning before go live to focus on a senior hire? I think the answer is always going to be no there. There's an element of, let's right size the talent and the speed to market which we require to maximize the opportunity. And make no mistake, we're still the tech part of InsurTech as well. So we can be a bit more agile in our entry points to sort of plant the flag and then expand. So have some talent lag demand after we gain some traction to make sure that we're being appropriate stewards of our own capital. So there's an element there, and I'm not trying to dodge the question. It's
No.
just a matter of we have a lot of things into consideration, and then we prioritize it, looking at all of it together.
What you didn't say was direct, I don't know, affiliate partnerships or affinity partnerships. Does that mean you very much in your experience so far, or maybe I'm just interpreting something in here says um, we go for the big channels, which is usually agents and broker channels within B2B, SME or larger, and we'll want to tap into that rather than finding a way around that. Is that a fair
We're,
interpretation
we're
of what you just said?
we're committed to an intermediated business model.
Okay.
Um, yeah, look, I think things like direct or white label support, embedded insurance may happen in countries which may not otherwise, have the distribution channels to drive effective growth for cyber insurance. But in established marketplaces with established insurance markets, intermediated distribution channels, that's always going to be our focus. We also see that's the biggest opportunity to grow the business. If you go and speak to any small, mid, or large brokers, they're going to tell you that the SME and mid-market penetration rate is sub 10% in nearly every established economy, with the exception of North America. In some cases, they may be 3, 4, or 5% even in SME. So there's huge opportunity just through the intermediated channel. There's not a lot of need to try to find creative ways to distribute a product.
Ron, go ahead.
So if this is for the channels, I still can't let go of the term active insurance. So let's come once back to the product. So your model blends basically insurance with complementary services, right? You mentioned vulnerability scanning, and there might be a whole lot of others from a business case perspective. If I look at all these services, which of them are the most important ones? Which of the services are the ones that get actually used and have a measurable impact on the insurance part of it, on the losses, on the renewals?
If it didn't have a measurable impact, we wouldn't offer it. That's what I would tell you first and foremost.
Okay.
I think one of the challenges that the insurance industry has created it for itself is confusion. We see these panels of services and offerings which require elections and require choices to be made by insureds in order to be protected. And are there the appropriate incentives in place? Are they getting a good product? I can't answer that. But when you offer a menu or a marketplace of services without guidance, simplified guidance, I think you're missing the boat. Look, particularly in SMEs, where we started our business and have continued to grow our business worldwide, um, they're not looking for new choices, new elections to make. All they want to know is that they're protected. SMEs and you guys are entrepreneurs. Let me take a step back. I think that because I think this is more fundamental. There are two mistakes that I would highlight the insurance industry as one made. One is the cyber insurance industry grew from the top down. Large, complex businesses,
Hmm.
have the most awareness because they have the most risk, right? And they have huge security teams and otherwise. So the insurance industry got smart and they built these out complex questionnaires and made obtaining insurance quite difficult at the very beginning, particularly for customers who lacked awareness. As we go down into small businesses, though, I think it is a misperception that SMEs or business owners, entrepreneurs are naive to risk. They just have a different prioritization. It's how can I best use my time to grow my business healthily, right? And if they can choose to find a place to park exposure to transfer risk, they'll do that if it's economically efficient. I think that when we make that even more difficult by giving them more choices, more options, a menu of things to purchase, it becomes noisy, it becomes inefficient. At Coalition, 90% of what you get from Coalition is offered by buying the policy. The policy is a gateway to the partnership. You are protected from the day you buy the policy, along with every policyholder worldwide. We're going to monitor all of your publicly exposed uh, internet. All your business is publicly exposed to the internet. That's all 63,000 ports that are exposed, all your exposed panels. We're going to monitor your technology and record that on our honeypots so we know when we see hacker activity against the software you use, we can notify you of it. And so when you join us, we're not asking you to do anything else. Yes, you can get security awareness training from us. Yes, you could buy MDR from us. But we think a decision should be very, very simple. You're buying into the protection of Coalition. You don't need to use anything else. There's no requirement there.
Would you would you say that those industries, because I think there is a forceful purchase of cyber insurance, and that's when you usually act as a supplier to large corporate sometimes. Have you found that that is an interesting buying trigger? Because that's basically if you, it's very easy if you can't win the big deal with the big corporate because they put in their procurement, some cyber requirements, and it's probably it's quite frankly it's that, right? Cyber insurance limit XYZ, including or excluding US. That's probably it's as far as the procurement department goes. Um, have you found that that is sensible way, or again, it's so minor to just going for, the established channels and that education that just seems like a distraction?
It certainly could be a distraction. I think if you think about, particularly large corporates or even mid-market companies who may have individuals who are dedicated to managing cybersecurity, if you brought them and the person who's purchasing the insurance together and asked them a question of whether or not they would want to purchase simply, limits, terms, and premium and paper, or if they would want to purchase a one plus, an added protection to what the person is managing cybersecurity is actually doing, I think they would choose the one plus either way. And we're bringing that option, right? We're another set of eyes looking over the business. And we're doing so in a way that is not going to create alert fatigue, not going to create more complexities for that IT security director or data privacy person responsibility in that organization. Um, when you think about how, of course, as you grow up market, the complexities there are quite different. And you may have completely isolated channels of purchasing insurance along with cybersecurity responsibility. those do take a different approach, a completely different approach. It has to be one in concert with the broker to understand the full scope of their risk management services and how that individual risk manager is viewing their business. And it's much more consultative in how you're going to integrate an insurance or even an insurance plus security model for that insured.
So kind of jumping ahead, and if you guys feel, because I think we've touched AI a little bit on how you use it and kind of the threat, but we can circle back if you feel we've missed something there. We'll have that option at the end of the discussion. But kind of if we, I think this kind of segues quite nicely into systemic risk and potentially also corporation.
Sure.
Now, one thing that I was told, and I think that kind of makes sense. One of the risks with SMEs um, is that kind of systemic risk factor. I don't know. They're all using AWS or although using Shopify, some other kind of platform dependency that is really hard to model. Um, how do you deal with that? What's your answer to it?
Well, hey, we get to go back to the fact that we scan the entire internet, right? Like that's exciting, right? Like we believe we have one of the most comprehensive models for understanding aggregation technologies,
Hmm.
right? Things like AWS. Um, it's easy to think, whoa, AWS is 40, 50% of the market that's using AWS. That's a scary day if it all goes out. But what we do is actually look at the technology itself. How segmented is that business? How realistic is it to think that to model that there's an event going to happen that's all of Amazon's going to go out? We believe it's unrealistic and improbable, if not impossible, for that to happen the way these many of the vendors are segmented. Now, that doesn't mean there won't be a large event. Large events may impact entire industries or sectors of a business, maybe entire economies, depending on the economy size. And we believe those events should be modeled. Um, and so our view on systemic risk is let's take a technical view of that first, and let's change our starting point from one that is based on perhaps market size or overall exposure. Um, I do believe that, at the moment, the past models have probably overstated the exposure to systemic risk. And what we want to do is sort of, we may mention this about Coalition Re, is democratize some of that process to make sure that all risk takers across all of cyber insurance are seeing a model which may complement what they're already using.
How would you, and then I think because we wanted to ask you about industry cooperation, and then maybe the reinsurance play might play an angle there. But would you say that it is more risky or less risky to kind of move things on premise versus cloud? Because you kind of have this dichotomy. I don't know whether dichotomy is the right word for it, but you have this things like cloud is dangerous. Um, but if we're kind of doing this in-house, this is really secure, and then you just kind of go, I don't know whether that's really the case. Is it again, it depends question on how you do it? But what's your take on it?
And Nick, I think you could do an entire podcast on that.
Sure.
The reality is like for small businesses, cloud-based services have become, you know, almost mandatory for businesses to use. Things like Office 365 or Google Workspace um, make running a business so much more efficient and cheap, right? Local storage is just not the way to go. Now, I'll say this, that economic decision may be different based on individual companies and the choice of using maybe a small regional MSP, a larger MSP, or using an AWS or Google Workspace is really going to depend on the individual characteristics of the organization. Um, and so, it might be interesting for you in the future to ask that question to someone who actually, managed that day to day. But, from our perspective, we model we review nearly every systemic, or I'll say aggregation vendor or technology that we see. And we monitor them for frequency of vulnerabilities, frequency of hackers activity against it. And we use that not only to go back to Ron's question earlier in our pricing. So understanding is what does that technology actually mean from a frequency perspective, and how should we build in its usage into pricing? Um, so it does inform, I would say, our view of those decisions, but it's hard to make a decision on whether a certain vendor or technology is right for a customer.
Maybe segueing then into industry cooperation. I think one, do you share that scan data that you have across the internet with potential competitors by maybe even making that your own, you could have a data um, revenue stream with that? Or is that, do you believe that's, no, that is our differentiative advantage? How far does your industry cooperation extend with that in play, and what kind of corporations do you actually push for, and why?
Well, this is precisely why we started Coalition Re. Um, the reinsurance industry historically is taking a large portion of cyber risk, yet they are significantly removed from the technical underwriting of that exposure. It's led to um, mispricing of deals. It's led to, I'll say, the reverse leverage of knowledge between the cedent and the treaty partners. Um, and so what we've done is created Coalition Re and our Helios platform to give cedents and their partners a ground up view or bottoms up view of their risk the way Coalition would see it, modeling against those vendors the way our technical analysis uh, projects. And so they get an alternate view of that. And it democratizes a bit um, how information is shared amongst all the treaty partners by the cedant itself. Um, and then we hope that it begins to turn the tide a bit on how we view aggregation, opens up capacity through stable views and stable capacity, brings new capacity in, which is just healthy for the long term. So, we are currently, in the market participating on several non-proportional treaties. We offer white label insurance as well through our Coalition Re entity, and we're committed to that long term. Look, I think one of my managers a long time ago said, sometimes it's just as good to be a good steward of the entire market's capacity versus your own. I think this is one of those elements that, if we want to ever have cyber insurance reach its great potential, we need more capacity to come in, but not just any capacity, not just paper. We need smarter capacity into the market.
It sounds like it's still wrapped with capacity, either primary or reinsurance capacity. And that must have been a strategic choice, because surely someone would have said, hey guys, why don't we put this as a data play? Because it might very well be that, I don't know, some other reinsurer, primary insurer, for whatever reason, doesn't want the capacity because that they think that's their, raison d'être. But they might be happy to build some data, buy some data, and that could also be a way to achieve it. But it sounds like you don't that you decided against that route. Can you elaborate?
Yeah, look, this is the same as sort of our MGA model as well, is that, put your money where your mouth is. Skin in the game is the great incentive.
Okay, makes sense. Okay, yeah, okay, fair. That makes sense. So you're basically saying, and that's also a way to, which of these services work. Well, if they didn't work, we wouldn't use them because they ultimately impact our, if they don't impact losses, um,
Yeah.
or risk, then, what are we doing? Okay, makes sense.
I still have not understood one single point, because you said you basically scan, you monitor as much as you can the entire internet, if you want to say so. Still, the intelligence sharing is here and there. Is there, if you can make a wish list, basically, not what you want to share from all what you monitoring, but some intelligence you would love to see more from others, what would actually then better your entire product? Would there be anything you can think of?
From others, you mean from companies, or do you mean from carriers, insurers, partners?
From whoever, I'm thinking about the entire intelligence sharing. It is fragmented. You went down the path that you say, well, we scan basically everything ourselves. We get all the data we need ourselves. So we're not dependent on others. But if others open as much as you say, well, in a way, we should open, what would actually make your services a little bit better? And when would it be too much? at some point, I can also imagine you run into antitrust or competitive concerns,
We're
right?
so far away from that, Ron. It's like, like I think there's been, there's a healthy friction in the market, right? If you think about the way the London market works, you have people, you have companies that are competitive, but also partners oftentimes. I mean, the insurance industry has always had this level of complexity. Um, I don't know what that line is, but we're so far away from it. This is still largely nascent in particularly the reinsurance business, where, information remains scarce. When you look at primary insurers, our primary competitors in the market, um, it's been a bit of a race, and because it's been such a race to capture, new market share product, there hasn't been really a new product with the same level of potential as cybersecurity since D&O. Now, we've been saying that for 15 or 20 years, right? Um, but the reality is we're still so far away from it, that there's so many new buyers still yet to come into market, that companies continue to invest in cyber insurance. How they've done that, obviously, is different. And whether it's buying off-the-shelf data, partnering with a third party to get scan information, I mean, that's largely a choice they've had to make, and they continue to make those. And we'll have to see how they work out over time.
Makes sense.
Makes sense. So to looking at the time, we still have a little bit of. I'm always trying to, well, from a practical point of view, from a buyer's point of view, from a broker's point of view, if you had to advise somebody today on buying cyber cover, what are the most important questions? What are the questions they just have to ask before going to market?
Yeah, thanks, Ron. I look, I think it's going to sound a bit elementary or simple. But I do believe for the majority of our buyers, the questions are simple. One is, do you understand your risk, right? How many endpoints do you have? What data do you hold? What's the risk to the business itself? And if you can answer that question, great. Check the box. You understand what your exposure is. The second thing would be is like how much of that risk are you willing to accept? Like, right? So what does a bad day look like for you? And is that a bad day that you can manage or not? Right? And then so that would make your decision of whether or not to purchase, a risk transfer or to focus on the 90% of areas you can protect your business. And the last question is like when a bad day happens, who do you call? There is no Cyber 999 or 911 if you're in the US. Police aren't really built to respond to your call when it comes to a cyber attack. What are you going to do?
Certainly
And
not
the
German
magic about
police.
insurance is that's tied into it.
I was just, I think you could ask people about the endpoints and some technical stuff. I think you could get that answer. Making that what that exposure would look like, and then an expected exposure. I think unless you kind of go through that either a dedicated, risk management exercise or actually through an insurance buying purchase, I don't think you're going to get that answer. Especially not what that would mean in exposure and then kind of the premium transfer. I would say that's probably one of the really interesting exercises of buying cyber insurance. It gives you, if it's a good form, active cyber, you name it, it gives you really good insight into what your exposure might be that your head of IT is I don't think that our CTO, he wouldn't be able to give me an expected value of our exposure financially. That's not his job. You know,
Yeah,
he would
sure.
give us the endpoints and all the stuff and say, we don't transfer, we mitigate, we minimize, right? That's the that I would get from my technical and security team. But I think that's the really interesting thing and ties in again the benefit of kind of getting it combined, because otherwise you as a decision maker, you're kind of getting these disparate points together and you need to wrap it around because it's a CTO and a CFO kind of having a baby, right?
Absolutely. I think, part of that CTO conversation is one that, and it's something we are challenged by, and we continue to try to create gravity from the security side of the house, right? We want the CTOs to recognize us as a cybersecurity player, not just insurance. So there's a marrying up between insurance and cybersecurity. There's a lot of there's actually one on our website if you want to see it. There's a claims calculator that we can give customers or potential customers access to. We have a freemium version of our control product as well, which allows CTOs or risk managers or anyone at an organization to test drive. These are things that can bring those answers to those tough questions. I think not having an answer is okay too, right? Just the unknown, like I don't know what a bad day looks like, should create enough uncertainty to determine whether or not risk transfer is an efficient use of your capital, right? Premiums that are nearly at an all-time low for cyber insurance today. So there's never been a better time to buy.
Will that become even better, that situation, if you just project it into 10 years or 5 years even into the future?
I
How would
hope
it look
so.
like? Will it be cheaper? Will it be an entirely different product? What's the
Ooh. Um,
glimpse into the future? Does it look like?
Yeah, look, I think one thing I can be sure again, is that the product will continue to evolve with risk. If you look out into where the business is going right now, where coverage is going, where technology is going, I think you're going to see more traditional players continue to invest in cybersecurity and cyber insurance as a partnership. Whether that's choosing access to vendors which reduce premiums, or whether it is building it themselves. I can't answer that, but what I can tell you is that I really hope that the solution does continue to evolve to manage the exposure, and I think it will. I think the momentum is behind it. I think just the evolution we've seen over the past 5 years, like if you asked an underwriter about web scanning 5, 6, 7 years ago, they would have been like, "What?" Now we're talking about inside out telemetry, understanding perimeter devices and configurations of systems exposed to the internet, in the day-to-day underwriting that feeds 24/7 monitoring of a business. That's there is things like zero-day alerting, right? Based on hacker activity that we can deliver to our customers to predict a loss before a vulnerability is even announced. Those are going to continue to evolve. Um, I think there's a couple of things that will continue to accelerate that. I think the conversations, about risk sharing or data sharing, as well as government backstops, the backstops are really good. I think the regulators are a great enabler. And if you see some of the conversations and debates happening both in local government as well as cooperations like ENISA in Europe, there's a lot of tailwinds for this business.
Will it still be insurance, or will it be the baby Nick just mentioned between the CTO, the CFO? So you have this integrated risk management tech.
There will always be insurance. If you think about, it's easier to think about cybersecurity as a diminishing returns curve, where you can continue to protect yourself and choose money to buy technology or secure your systems to a point, but then there's always going to be that residual risk. There's always going to be that tail exposure. And it becomes an inefficient use of capital to continue to do that, to manage that. And that's where the insurance market should ultimately sit. And that's what we do, right? We want to make sure that through our underwriting and through our alert processes, that our partners are focusing on the things that are going to reduce that tail exposure. What's left at the end of the day, right? Now, a lot of that is human risk. So, for example, it's very difficult for any CTO to manage an employee's use of their email for personal usage. They may be more exposed to phishing attacks or otherwise, right? Now, there's some things you can do, of course, right? You can train people, you can put appropriate protections in place across your email, you can put, phishing simulators, you can do all kinds of things to do that. But at the end of the day, the human is a risky point, and you want to insure against the activities that that person could fall victim to.
Just kind of on the future of potentially cyber, what I haven't heard yet, and maybe it's just because I'm missing a beat. Where would you say that intersection of professional indemnity insurance, and also legal liability. Because if I'm starting as companies digitalize more, right? You're kind of stacking these services up and you kind of just have a cascade. And one is the technical
Mhm.
element, but especially it's like who pays the bill, right? And how interacted and connected is as you're writing, I don't know, as you're making partnership agreements, and how does that flow back into your actual cyber exposure if you have one? Is that an angle that you think will is interesting, or is that something that you just think we have so much room on the technical side that, kind of making that child come with the lawyer as well? So have finance, IT, and lawyer, that's a long way coming, not, 2030.
Yeah, let me see if I'm tracking you right, Nick. So professional services as an exposure to be insured. Is
So,
that
so
right?
basically, what I'm thinking is, as I am offering services, either IT services or professional services, there is a cyber element to most of the services being delivered. Some
Sure.
way more technical, some less so, right? The bakery example probably on the less so side. How does, the protection overlap between what I agree with liability and cyber match? And how is that then compared to the type of contracts and legal clauses that I agree with my partners, either downstream or upstream? And is that even relevant? I just know for a fact that even large corporations, that IT certainly doesn't talk to legal about that stuff.
Oh, let me, yeah, look,
I
you're right to nail this. I mean, the European professional services market, particularly for unregulated professions, is looked at as a general liability environment, a casualty product for the most part.
mean,
That is historically the way it's been. Um, uh, this is where we talk about how cyber overlaps multiple areas of coverage for an insurance business, and it's important to look at that, I think, more as opportunity than risk.
Mhm.
Um, Most professional service organizations, lawyers, architects, engineers, technology firms, the list could go on and on, uh, better be using technology or they're going to be um, uh, quite at risk of losing their business to competition. Just a matter of the scale you can adopt by using, or capture by using a technology is one you can't ignore. Yes, it brings certain exposures with it, some of which are cyber exposures when you come to sort of business interruption, as well as, of course, cybersecurity issues. But a lot of it is in, do I have a professional, services exposure by delivering my services through the use of technology in an appropriate way? So, what's the standard of care for delivering whatever service that may be? There's also media components. So we talk about overlap, right? There is, am I wrongfully collecting information which might be in violation of GDPR or otherwise, right? There is, of course, banks and other institutions may have operational risks which fall outside of what traditional cyber insurance might be. Now, my feeling is that cyber insurance will ultimately be the comprehensive exposure for customers of all types. And that's not a stretch of the imagination. The fact is that cyber is the starting point of risk going forward. Even when you look at traditional lines like property, how are properties monitored today? Most properties are monitored using an administration system, which monitors things like temperature, humidity, equipment that could cause fire. It's monitoring the operational quality of those machines. Cyber risk or technology risk is just about embedded in everything every company does today.
and just to kind of give you a example, and then I know we have to wrap up, but basically any company that works with a larger company that uses as Amazon service has some form of uptime in there, right? Now Amazon is not going to take and it's not going to they give you some credits. So then there is a wedge, but big business will want to have some other uptime on the layers, et cetera, et cetera. And then sometimes you can get Amazon included or not. What is not in these discussions on these things is what is actually the financial cost of something. Like as you're going into these uptime terms, it's almost like that risk is not a financial it's not a financial consideration where it clearly is. And I think that is an interesting element that is absolutely underdeveloped as you're going into contract negotiations on non-purely financial terms and anything related to the provision of services as they relate to technology, which are somewhat outside of the control of what you're actually doing because you're stacking your business up on layer and layer of services and infrastructure, etc. Um,
Yeah. I mean, that goes to the point of how complex conversations can be with organizations about this topic. It is,
sure.
as companies are thinking about those things, there is risk throughout every purchase decision that they make, every decision of which technology to use. Even, tier one internet exposure at the end of the day is like, if I'm choosing a place to build a building, what does my Wi-Fi look like? Like that's something we think about these days. Like, is connectivity a concern? What does the power grid look like, and how does that impact my technology itself? I mean, so there's quite a few complex, scenarios we could draft up today to drive this conversation further, but that is really hard to do.
And I think the interesting thing is if someone just puts a monetary value on it or a range, I think that because that reduces the complexity, because anyone, especially lawyers or IT security people, can drum up risk. Risk,
Yeah.
risk, 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 risk. It just doesn't get you anywhere. If you can't map that out to a very clear opportunity on a commercial contract.
But then it's hard to find the exact person who can exactly do this, like you mentioned before, right? The CTO
Coalition can.
can maybe picture what does a bad day look like, but that's basically the end of it. He would not tell you how much money do I have to put in to swim back from that bad day into an okayish day or even a good day. So maybe Kyle, as the last question, who are the people you actually need to talk to? And are there some stakeholders that are more often than they should be not being included in the discussion, but have something meaningful to say?
Yeah. I mean, look, so I can't let it go without saying this. First of all, I know the conversation just now was on a more of a complex business environment, but one of the things you raise about how difficult it is to create to understand the value of a loss and what a bad day might look like leads to one of the key things that we sell on is that the best bad day is the one that never happens, right? The
Sure.
best, the best, the best insured experience is not a paid claim. And I think we would have said that maybe in other lines of business 20 years ago. Like the best insured experience is the claim avoided. And so our entire approach is on preventing frequency of claim, right? And so we're saying, hey, who knows, not who knows, we can give you some guidance on what a bad day might look like, but let's focus on the things that we are sure about. And we can avoid a claim by doing X, Y, and Z, throughout this partnership. So remind me, what was your question again? I went off on that and I totally forgot, totally
Um,
lost
you brought it back to active insurance, and I'm very happy about it. So we're
what I do.
back
Sorry
on
about
the draw, but I won't take another round of it. I was asking about it. It sounds really, really complicated. And the people who can tell you what a bad day looks like, probably not the people who say, well, what does that mean in terms of money and financial terms? And so it is so complex. So my question was actually about who are the people who actually need to talk to, and are there certain people
Yeah, I mean,
who are not being talked to as often as they should, but they have something to say?
sure. I mean, we have over 100,000 customers worldwide, the majority of which are small businesses. For those entities, some of them don't even have someone responsible for technology. So in those instances, it's usually the decision maker is the business owner or director, right? Like that becomes who our talking point is. For those companies that have grown a bit more mature, it becomes who's in charge of technology or cybersecurity, plus the person responsible for purchasing insurance. And that may be someone that's a treasurer, it may be a secretary, it may be a CFO, who knows? But the personas are responsible insurance and responsible for technology or security. And as you go up, you may actually want to talk to the MSP, right? Who the MSP is and how they're, depending on the level of control they have for an organization, even if they actually exist outside the organization. So you may expand that to include them. When you get into larger organizations, you may have entire risk committees. You may have somebody pulling the purse strings and actually driving the budgetary process for purchasing insurance, and you may have entire security teams. So the first thing I would say, Ron, is that when you're focusing on developing a relationship with a customer that's going to be for the long term, first you need to understand who they are, right? Understand how complex they are. And remarkably, a lot of this information is available to you through those same internet scans that we already perform. So we're able to identify and target the appropriate people and conversations we need to have the most effective outcome.
Carl, I think that's a great closing statement. As I anticipated, we ran a little bit over. There is still things I would love to pick your brain on, but kind of conscious of time. I think, gentlemen, we we call it a day here. Thank you so much for your insights, following us on the tangents that we felt were interesting while listening to you. All the best to you and your team, and keep expanding the market as you do. All the best there, and I would say anyone listening and who liked what they heard, maybe give Kyle and his team a shout. Seems like a really cool outfit to participate in. Thank you
Look,
so
thank you
much.
both. I mean, look, this has been a fantastic experience. I'd be happy to join you again and continue this conversation. I love talking about our business, and I'm super excited about what we're doing. Nick, thank you personally. Been a great partner for us as well, and I appreciate everything you've done here. So thank you so much for you guys.
Thank you. Next time with more AI.
But maybe that's okay. There will be enough AI, I think, in the years to come, especially since, I changed sides and I'm now fully AI bro. Anyway,
Love
guys,
it.
thank you very much.
Thank you both.
And for everyone listening and watching, thank you so much. And looking forward to your comments when you post this. Bye.